Welcome to another episode of Bullish Banter. I hope you enjoyed the previous one, and more importantly, I hope you're doing well. I'm your host, Jesse. I'm joined again by the one and only Rufas.
Hi guys, Rufas Kamau here. Happy to be here.
Yeah. How's your week been?
The weekend was good.
Yeah.
We had an event in Nakuru.
Yeah.
So just recovering from the trip this week.
How are traders? How is their sentiments on the markets? How are they faring on in terms of at least their understanding? Are they optimistic about their portfolio?
From what I'm getting from out of traders,
Yeah.
The markets are kind of weird. We are seeing a lot of correlations being broken. For instance, yesterday you had a crazy rally in the dollar index.
Yes.
But also the Nasdaq was also going up.
Yes.
SP 500, Dow Jones were going down. So a lot of confusion in the house.
What do you think might be driving that?
On one side, I think there's been some form of optimism in stocks as a result of the tech stocks doing really well.
Okay.
So if you look at Nvidia up over 100%, these top tech companies, Microsoft, Apple, Tesla, they're already doing well.
Okay.
But if you consider them as a percentage of the rest of the companies in the SP 500, you notice that most other companies are either level from where they started at the beginning of the year, and others have been losing over the year. So for regional banks, we know they are down over 43%.
Yes.
So the SP 500 seems to be struggling to rise, but the tech-dominated Nasdaq is really doing well.
Now, I believe the gold rally up to, as I look at it now, is around 103. And there is an impending crisis in the US whereby they are still yet to decide if they will raise the debt limit, which is affecting their ability to repay their debts. Do you think that has a impact on how the dollar is behaving in the markets?
First of all, it's not the gold rally, it's the dollar index.
Yes, dollar index rally, sorry.
The gold literally broke the 2000 level on its way down yesterday.
Yeah.
So I think from the news, it was early in the morning that US President Biden has cut his trip short to Europe, to Asia. So he's going to visit just one country and then back.
Okay.
Mainly because the debt ceiling crisis is becoming a real challenge.
Okay.
From the projections from the US Treasury Secretary, Janet Yellen, the US could default on its debts by 1st of June.
Okay.
So if Congress doesn't resolve the debt ceiling issue before then it's a real concern for traders around the world.
I think we have spoken about this before, and clearly it is something that will always emerge every year, whereby debt ceiling will be moved. Obviously, the economy grows or the debt obligation grows annually.
Yes.
So it is much better if they find a solution to not make it a existential crisis, but rather something that they work within the system, because I think it is a, how do I put it, a systemic risk as opposed to systematic risk. Maybe they can try to just go away with it.
It's basically can kicking. You just kick the can down the road, and once you meet it again, you just kick it again.
I'm hoping it will never. It will not
hoping
be there
the problem
the next time
will solve itself.
Yeah.
But what we are currently seeing is that the Fed hiked interest rates at the fastest rate ever. So with high interest rates, then comes higher debt obligations.
Okay.
So the amount of interest that the US is paying to its existing debt is only rising.
Okay.
So even if they push the debt ceiling higher, the interest is weighing on the US budget.
Okay.
So I think that's the point of conflict between the Democrats and the Republicans.
Now, away from corporates, governments, and all these institutions. Let's say I want to trade today. Would you advise me or recommend to me I go to my bank, ask for, let's say, $1 million bob? I want to get into trading, and I want the big capital because, big capital sometimes offers big returns along the way. And if I, unfortunately or fortunately enough, do a 1 lot size or even 10 lot size gold, and it goes my way, you're able to make your $10,000 at the end of the day. How would you approach or recommend to such a person?
Counter question. If I told you that, let's say I'm farming onions in Nakuru, and they are really doing well. and I told you to now start farming on your own. From today, you just go to your bank, withdraw 1 million and start farming onions.
Yes.
What would be your reaction?
Yeah, I mean, that is an interesting proposition, but I will not do that.
Why?
First of all, it will take at least 3 months for it to grow.
Yes.
And I'll need to have a guarantee of payments.
Yes.
Or not a guarantee of payments, but rather guarantee of a market where I will take these onions to buy.
Yeah.
And the most important thing,
yes,
the price at the market must be right for me to be able to repay this loan on time.
Yes.
Yeah.
So the thing is, okay, the point I'm trying to bring across is that trading in the financial market is a business, just like any other. So there are those considerations that you have to make before you start trading.
Yes.
First, is do you have the money? Do you have the money that you can risk in that business? The other thing is, do you know what you're investing in? So for me, if you told me to go and farm onions, first thing I would like to check where do onions grow best? What kind of soil do they require?
Yes.
What kind of labor do they require in terms of input? What kind of incentives do I need to add to the farm?
Fertilizer,
make sure it's irrigation and all that.
Okay.
So once I understand the core features of the business, I look at the scope of the market. How is the competition like? Then I will have an idea of whether it's something viable.
Okay.
So the same case applies to trading. So before you even begin trading, the first step is to understand what trading is, which basically means investing time to learn. So invest some time to learn, understand the basics, look at other traders, look at how they are faring, look at the best ones, borrow some lessons from them.
Yes.
And then once you understand what you are doing, then you can make a more informed decision.
I think I've had this question many times. Somebody, or even experiences. Somebody has put in, let's say it's 2nd of the month. They have deposited in their account perhaps $200.
Yes.
That was rent money, by the way.
Hoping
that by the end of the day on the NFP, with the high volatility, high expected price action. And definitely that can play either way. But I think it's quite risky. I think trading in terms of psychology, maybe you might find a way to put it. It is best when you trade when you do not have expectations from what you're doing. When you go to analyze, you put in your positions, you don't put a price target to it, like I need to make $100 on this trade. And if it goes my way, somebody must have manipulated or something like that. That is where I think I learned the hard way, by the way, back in campus, where you have to pay your fees. And you have put in your meager $50. And that is the only balance that is remaining. So it is something takes a toll on you, but hopefully most traders would be able to avoid that expectation from what you are trading in.
What I can say is that expectations must be there. No matter what you try to do, there will always be expectations. See? The first time I traded on a live account, I made a couple of dollars and 100. But then that night when I was sleeping, I was just thinking, what if I was trading a bigger lot size? What if I do this for 100 consecutive days? I was doing all these projections of how much I could make if I was trading consistently every day, always in the markets. Anytime you get into a live account trading in Forex, commodity stocks, you'll have these thoughts and projections that you're trying to understand what you can make over the near term. So the expectations are there. The idea is to understand how the market works and then to lower your expectations on the short run and raise your expectations on the long run. When it comes to, let's say, depositing some money, let's say, like you've mentioned, $200 and you expect to pay rent over the next 1 month. I've been there. In my earlier days of trading, it's a funny story.
Well, this will be a podcast of, how do I put it, testimonies of wrong financial decisions.
There was a time I survived, let's say, for a whole year on $1,000 account. So I had $1,000 in my account. So I basically trade for my next bill.
How were you able to manage the pressure? Because, you are basically doing it on the line. Did you have perhaps some funds aside as an emergency?
I didn't have an emergency fund. I didn't have funds aside. So I would literally be very lucky.
Okay.
So sometime I would make some cash. I make $100, $200. I would withdraw that, pay my rent. For food, I would get it from the market.
So when you make such profits, are you like putting it aside now? You remove the profit so that you use it for your
Yes, you just withdraw and leave the $1,000 balance.
Okay.
Yeah.
Okay.
So the worst thing is that on a bad month, when you don't make money, then you are forced to withdraw your capital.
Okay.
So if you, let's say, needed to pay some bills worth $250, then you withdraw, you're left with $750.
Okay.
And then for the next bill, you'll probably not have gotten back to 1,000.
Okay.
And the account keeps getting smaller and smaller.
Okay.
And eventually it goes back down to zero.
Okay.
So it's a real challenge if you are risking money that you need to pay your bills tomorrow.
Would you recommend that practice to anybody at the moment?
No, it's an extreme sport. It's an extreme sport.
So how do you right now plan your finances in a way that you accommodate trading, you accommodate daily expenditures, and it allows you to engage the market in a more objective way as opposed to dependent on trading?
Yeah. So the real trick is not, you see, if you have a business, if you have a job, the real trick is not to quit your job or your business to start trading full time.
Very good point. Go ahead.
So if you're fully dependent on your trading account for your daily expenses and all that, then you literally need to have a really big balance. So if you're just starting with an account with $200, $1,000, anything below $10,000 won't help you live the life you want, while at the same time trading comfortably.
We have seen a lot of traders, and I'm sure if you myself have engaged a lot of traders, you have engaged them, especially in Nakuru and everywhere you go. They ask this question. They have traded 1 or 2 months, been a good profitable session or series, and you feel like you know the markets better, and you're making obnoxious amount of money. You feel like it is paying your bills, it is giving you ability to buy a car and everything, and now you want to quit your job. Is that too soon, or how long should you stay in the business to consider maybe I want a change of career? Not necessarily quitting, but rather I consider it a change of career.
I will not do anything to discount having an alternative source of income.
Brother, consistent, regular source of income.
It doesn't have to be consistent or regular, but if you have an alternative source of income, then the kind of pressure or expectations that you put in your account tend to be minimal, and in that case you are able to focus more on the trading process.
A good point. Now you see you are making good profits, and at least you are consistent in terms of your risk management. Your equity is quite steady, and you mentioned something, investing time in your education, understanding the business. Personally, I think the best way to not only grow in the industry would be looking for other assets or investment classes, not only within financial, within maybe where you stay, but obviously within the financial markets. Perhaps you have been doing Forex for, 10 years. You start being interested in cash equities or CFDs. You start getting interested in a futures contract. Wouldn't that be something better, because it gives you a different challenge, a different opportunity for you to learn how you can benefit from it, but also allow you to keep your cool and your head on the swivel?
It's a natural progression in trading. So if you're just beginning trading, you're focused on currencies, volatile stuff. You're on gold, you're on oil. But the more experience you gain in trading, you find yourself having separate accounts where you have an investment that you're expecting to recoup in a year, 5 years also. You could be holding a position in stocks, a company that you really believe in, and then you are looking to, reap that reward in 5 years, 10 years, and so on. So as your trading experience grows, you find yourself diversifying more. So you'll still be having an active trading account, but you have other investments in other asset classes.
Good.
But then, when it comes to making bad decisions, I wasn't done with that. I think the worst decisions I've made, they have almost exclusively come on a Friday. You've had a good week, and now you're just looking to squeeze in just $200 more for the weekend.
The ego is speaking to you.
The confidence.
How does it go? So is it just before the news, or you are not this time round? You are not looking at the charts as you normally do.
You have a target. Let's say you have made the target or not.
Yes.
But it has been a relatively good week. You have not lost money.
Yeah.
Then on Friday you decide, if I squeeze it just one more position, I would have some extra cash for the weekend.
Chances are very high the lot size is different, probably 3x what you have been using throughout the week.
Mostly not the lot size, but trying to justify an opportunity when there is none.
Okay. Interesting. In personal finance, there is usually this, I don't want to say it a statement, but sort of a philosophy, whereby you set a fixed amount of your money for savings, and then, the rest you put it in your expenditure base or something like that. Now you are a trader, right?
Yes.
Is there like an ideal way to manage your finances so that even though you have your percentage of savings or however you decide to save your money, you say, this one I'll allocate it in FX or even this business. And then number two, is trading a way of saving, because you are beating inflation, you are beating all these other expenditure needs that you have during the month or even the quarter.
When it comes to let's say managing personal finances, I would say it's very personal. Doesn't apply the same. So we can't have like standard rules that apply to everyone.
Definitely.
So you know this saying, whenever we say every time I save some money for a rainy day, it rains the following day.
Well, it did rain.
The thing is,
it usually does.
You can have some savings. Let's say this is for my emergency or for a rainy day. And then some emergency happens. Emergencies differ from person to person. What qualifies as an emergency for you may not be an emergency for me.
Okay.
You see? Plus, of course, there's the issue of insurance. Most of the things that people describe as emergencies are actually things that you can insure against.
Okay. So you pay the cost before to cover whatever will happen in the future.
People save for repairs, for their vehicles, in case something happens, but you can get an insurance for that.
A quality insurance.
People save for health. Maybe if you get sick, but you can get an insurance cover for that. When you talk about emergency funds, they are mostly overrated. So unless you define the emergency, then literally everything can qualify as an emergency.
Good that you mentioned that. I was seeing.
By the way, I need a 50K. I have an emergency.
That would be hard.
Exactly.
I saw a recent, when the banks were in crisis, you could see Bank of America, JP Morgan, all these major banks, Chase and the rest, And even if you look at Kenya, I think the standard savings rate is around 4.75%, And US is 0.01. And I am looking at back in the day, like in 1970s, Japan, sort of Japan issue, you see? They have so much savings that they export it to other countries. And I think based on the 2 or maybe 2.5 financial crises we have had in the last 23 years, makes saving to be an active sort of investment, where you are either having it in the stock market or in the bonds market or even trading, so that it is staying there. You are not actively using it at the time, but it is actually generating some income. I think saving has changed over time, not a fixed asset sort of option to an active asset.
I think we have to separate the two things, saving and investing. So when you're saving, let's say you have worked hard and earned some money, and you want to retain that value so that you can use that money in future. That would be saving. But then if you have worked hard and you have some money, and then you put that money somewhere where there is risk, then you're basically investing.
In Kenya, saving is buying land, right?
Yes.
You know that. So that's why I'm saying this person buys land next to an SGR line. And he knows within the next 2 years, when the surveyors come and do their thing, we are going to get this land quoted at 1 million. You bought it at 200K, it's quoted at 1 million. So it might appear as savings for emergency or rainy day, but at the end of the day, for him, he just wants to capitalize on opportunity. So he's speculating using land. That is why I'm saying
risk.
Saving has changed its definition over time. I don't know if that is the case.
The thing is, over the last, let's say...
Or the definitions have intertwined.
No. Over the last 10, 20, 30 years in Kenya, we have had a crazy appreciation of land as a result of developments in infrastructure. So places that you would never, let's say, buy land because they were so remote. Now, after the last mile project, you know, we have electricity in those areas. We have water. We have key amenities. We have security, hospitals. We have roads and so on. So those roads just realized their value. Or those areas or parcels of land. So whenever you're in a bull market, we have these self-fulfilling cycle that almost makes investments certain, despite people knowing very well that markets always have a bull and bear cycle. So for instance, I don't know what to use as an example. Let's use Safaricom. So since the IPO at 5 bob, if someone told you to invest at 5 bob, a year later they come back to you, they tell you, oh, I've doubled my money, now I have 10 bob per share. Another year later they have 15 bob. Another year later they have 20 bob. So by the time it's 20 bob, if a person comes back to you and they tell you this is a sure bet investment, if you just put your money here, it's going up. So it becomes almost truth, or self-fulfilling prophecy, that whenever you put your money in there, a year or two down the line, you'll have some profit. But then bull markets come to an end. With Safaricom, I think it was 46. Then we had like a bear market happening real quick down to what? 14 the other day.
I think it's 13 as we look at it today, around 13 shillings per share. And
so
probably
the same thing happens even in real estate. It's only that our real estate hasn't matured much, but eventually we are going to have bear markets, bull markets, normal market cycles. So speculating in land is an investment and it incurs out of risk.
Do you think perhaps, as you have engaged a lot of traders and in different locales within Kenya, over the years you have been educating traders on alternative investments. Do you think there's an improvement in ways in which people plan their money, in that they do not just use the traditional methods of savings and obviously investments, but they are now trying some alternatives which are risky? And you can see some of those who get in from the days when Bitcoin was new were cashing out early 2017. And then there was that bear run and then an appreciation. Perhaps there is an illumination in alternative ways of putting your money into use and working for you.
There's been a significant improvement for majority of the traders and investors that I was interacting with, let's say 5-6 years ago. They were basically asking, where can I put some money? Can I establish a Mdumba shop? They were looking at M-Pesas. Some guys would look at Matatus, do this and all that. But right now, people are very skeptical about the kind of risk and market that they are entering into. Some time back, if you told someone to, let's say, buy Bitcoin, that's a scam, I am not getting into that. But right now, people are actually taking time to understand the market before actually committing their money, which is a really, really good move.
Is there perhaps an oversaturation of education and information out there in the market as opposed to quality information that can make you do an informed decision on your investment choices?
I wouldn't call it oversaturation. Think of it the same way you think about the internet. So the internet is this ocean of information, but whenever you need something, you're able to narrow down on exactly what you need. So Kenyans are really good in terms of research. So any single point or area where there is an investment opportunity, there's a good chance you'll find Kenyans there. Meaning basically drawing back that they do out of research into their investments.
We are an entrepreneurship country as per se, so I know it plays along in trying to see where you can make some extra coin.
The weird thing is, I was looking at the NSE All Shares Index. Recently hit an all-time low. I think it was 96.
And 30-year low. 1970, the last time you saw the price.
No, it's not that year. It's all-time low. It has never been that low.
Any future bullish run?
Depends on fundamentals. You know, just because a price is down 50-60%, that doesn't mean it can't go down another 50-60%.
It's good you have mentioned NSE, and there was this deal, is it Mwalimu Sacco, which got turned into a bank, and it couldn't sustain deposits and obviously their money, and then it got acquired again. We both have parents who at some point were heavily invested in SACCOs.
Yes.
And I know most young guys right now are either doing trading as number one way of active cash flow, and many others like maybe fixed incomes, MMFs, money market funds, that is, and even bonds to some. Do you think NSC is suffering from barrier to entry perhaps, or what is causing the Kenyan boss to just perform badly over a 3 months period?
I think it's the macroeconomic conditions. The biggest factor being the value of the Kenyan shilling against the dollar.
Okay.
So Kenya being a net importer, we literally import everything.
Okay.
So with that kind of net imports, and the Kenyan shilling depreciating against the dollar, then people are really left with nothing in their pockets.
Okay.
So if, let's say, a company in Kenya was making a certain level of profit, let's say before COVID, and then 3 years down the line, the Kenyan shilling has depreciated over 30% against the dollar, then the general price level of goods and services around here has really gone up.
Okay.
So people are spending more on those goods and services, of course the basics, and they have less to buy other stuff.
I think that puts a lot of conservative investors in a very tricky position, because you would typically go into this sort of relaxed and less active markets, but now they are not offering any optimism in the future. So perhaps
actually, there's an alarming headline on Business Daily today, where the central bank literally said that 13 banks in Kenya are basically in a very poor financial condition. Mainly because they have breached their capital and reserve requirements.
The ratio.
Which basically implies that there is a very big risk of what we call a bank run. So if like their clients were to withdraw a significant portion of their deposits, then the bank would collapse immediately.
So what happens to be just an concentrated issue within US and a few parts of Europe is looking like a contagion, I guess.
Yes, the problem is much bigger, especially in our economy.
I mean, today we are expecting inflation data from Europe if it hasn't dropped. And last week we got it from US. Perhaps with the inflation cooling down, do you think perhaps the Fed would consider, because their action definitely are impacting other countries, especially the ones which have dollars, their reserve currency, and strength against today as we speak, it's at 103. So definitely it's appreciating, going against what the Fed would typically want to have at the dollar. Perhaps that signifies maybe they will sort of have their call tea together, their Zoom meetings, say chill kidogo, so that our economy also can adjust and adopt the policy measures we have made there.
Well, if you look at inflation and you look at history, it has proven again and again that it doesn't move in a straight out path. So in most cases, whenever you have had inflation rising, after it dropped, there was possibly or potentially a second wave after that. So the fact that we are seeing inflation coming down from previous highs of last year, we could be having another phase. Remember when we had these curves with COVID, where we would say we have flattened the curve, the numbers go down, and then a couple of months later they spike up again. So it could be a similar problem with inflation, where yes, it goes down for a while, then it rises again, because we haven't solved the underlying conditions that were leading to the inflation.
In simple terms, as you look to get into trading, I think the best thing you can do is invest your time in education, which you can either pay or take at the free that is available in the internet, because I know the best way for you to manage your money is to know how and where it goes, I think. Unless you have any closing remarks for us today.
I don't know. I think that's the key concept. Just learn fast, understand. Trade what you know. Never trade something that you have no idea how it works.
That has been awesome. I think we'll be having a lot of questions from this and from a lot of traders whom we have asked this question. I hope we have answered it satisfactorily. Feel free to always share your questions either on DMs or even just below the comments on YouTube. We are glad to always answer them and of course address them. Other than that, I've been your host, Jesse.
Rufas here. So if you have any responses, comments, or questions, feel free to reach out on my Twitter account at Rufas KE.
Ciao.